Good evening. You are welcome to Abeokuta Grammar School Senior Honor Classes. My name is Shanu AA. I'm to take you financial accounting. The topic for today is non-profit making organization. Non-profit making organization. We have the following objectives. At the end of today's class, students will be able to define what non-profit making organization is, give the features of non-profit making organization, explain the sources of funds to non-profit making organization, and prepare the necessary book of account to record the activities of a non-profit making organization. Let's go to the meaning. Non-profit making definition. A non-profit making organization is an organization that is established for the main objective not to make profit but to provide essential services to their members. They also safeguard the interests of their members. A non-profit making organization is quite different from the profit making organization that you all know before. This profit making organization established to make profit, but a non-profit organization, as the name implies, it is established not to make profit, but to provide essential services to their members, to safeguard the interests of their member, and to promote the interests of their member. Let me just give you a short definition. A non-profit making organization is a type of organization established to promote and safeguard the interests of their members and not to make profits. So that's just simple definition. In WAEC, if you are able to give this definition, you will get your 5 marks or 2 marks. Now, we want to progress. Let's look at the features of non-making organization. What are we saying? We can also say characteristics. What makes us to differentiate non-profit making organization from profit making organization? 1. Features. 1. Funds are provided by members. Funds are provided by members. Number 2, at the end of the year, they will have what we call returns on their little investment. But they will not call it a profit, or they will not call it a loss. They will call it surplus or deficit. At the end of the year, they always arrive at surplus or deficit. Another feature is that under non-profit making organization, they are to call the book of account as receipt and payment. The book of account is called receipts and payment accounts. Unlike the profit making organization, they call their own cash book. And also another feature is that under the non-profit making organization, we have they prepare what we call income and expenditure account. But in a profit-making organization, what they prepare is profit and loss account. So if you see this kind of account prepared by somebody, you should know that it is a non-profit-making organization. And now, we now go to number 5. We are looking at features of non-profit-making organization. Another features is to talk about provision of essential services to members. Provision of essential services to members. So these are where we stop our feature. We see numerous features of a non-profit making organization. Because of my time, let me limit it here. Then we now progress to look at source of fund to non-profit making organization. We have number 1. We have subscription by members. Subscription. I will explain that. We have number 2. Donation. We have number 3. Fine and levies. We have number 4. Loan from members or public. 5. We have what we call entrance fee. And we have number 6. Income from trading. These are some of the sources of funds to a non-profit making organization. So let's look at subscription. Subscription is a compulsory levy being paid by a member of an organization to be part of that organization. To be a financial member, that means you can be voted for and you can also vote. So for you, this subscription is paid maybe on monthly basis, on quarterly basis, or on yearly basis. It's a source of income to this organization. Then also donation. We are talking about donation as a free gift, a voluntary donation. It's not compulsory like online subscription. This one is a voluntary donation by member or from the public when an organization is banking upon a capital project and they need their money. They can go for donation from members, they can go for donation from the general public. Another is fine and levies. These are another source of fund, another source of fund to where? To non-profit making organization. Fines and levies. One way or the other, there's a way we can find ourselves when we want to do something, or when we want to do a capital project. We can ask ourselves, let's contribute so amount to finance that project. We are levying ourselves in order to accomplish that particular task. Then we have loan from members. Apart from donation, we can also ask for loan from members or general public. When we are talking about loan is to be repaid. That's what loan is after. But donation is a free voluntary donation, may not be paid back. But when you are collecting loan from member or general public, to do one thing or the other, you need to do what? You need to pay back. So that's that. So we have an entrance fee. Entrance fee is the money paid by a new member to that organization. For example, an organization has been established for a long period of time, and we have a member, we have someone that wants to join that association. That person will come in with what? With a fund, with money, and that's what we call entrance fee. It's a source of fund. To who? To non-profit organization. The money collected from that new entrant will be used to finance the project at hand. So lastly, we have income from trading. We have some organizations, they embark on trading activities, and these trading activities can earn them some income to be used to finance the business activities. So on that note, we have completed the meaning of non-profit organization. We have looked into features of organization. We have talked about source of fund to non-profit making organization. What we need to do now is prepare the necessary accounts. But before we prepare the necessary account, we would like to give you a format. The format can be done in simple form. We have, I will not draw the comprehensive format, but I will let you know because we want to solve questions and because of our time. When you have to prepare the first account, called a statement of affair. A statement of affair. A statement of affair in a non-profit organization is being called a statement of affair, but compared with profit-making organization is called balance sheet. As at now, you should know what balance sheet is. All the features of balance sheet will be the features of statement of account, statement of affair. On the statement of affair, your asset will be on this side. You have your asset on this side. You have your current liability on this side. Current asset on this side. Sorry. You have your current liability on this side. And when you have, you know those information. I will only give one example, grants. I give one example here, debtors. I give one example here, creditors. By the time you add this side together and this side, deduct what you have on this side from what you have on this side, what we are looking for in this account is called accumulated fund. It's called accumulated fund. In non-profit organization, we will not call it capital, so that we can differentiate it from where? From the profit-making organization. That's why we call it accumulated fund. So what you are looking for in your statement of affairs is what is accumulated fund. Then we now prepare what we call the profit and loss account. Sorry, we prepare what we call income and expenditure account, because we would have been giving receipt and payment in your account. We have what we call income and expenditure accounts. So the next says some students we have a way, I don't know why, they committed one error or the other, because the word says, because the account says income and expenditure account, they put all their income on this side and they put all their expenditure on this side. If we do such a thing in an exam, the examiner will not look at any other thing than to cancel their account and award you 0. So what we are saying next is that this side is meant for the expenditure, while this side is to be called the income. And what are the income from the, what are the expenditure that you can arrive at expenditure? We have salaries, we have rent, and what are the income? Subscription for member, donation, At the end of the day, when you add these sides together and you subtract from what you have here, you get what we call surplus at the end of the day. So what we are saying is that because of our time, I cannot give a comprehensive income because we will still solve some questions. By the time we are solving question, all other items to be under your income side will have been recorded there. All items will be, all category of expenditure will also be recorded on this side. If this side expenditure is greater than the income, we have what we call deficit. So let me just write short note here. Surplus. Give me answers. Surplus is the excess of income over expenditure, whereas our deficit is the excess of expenditure over income. Then at the end of the day, the final account that we use over here is the balance sheet. So I will also give a little on that before we go to the question of today. We have what? Balance sheet. Our balance sheet is like our state of affairs. So I will only give assets on this side, and I will give only one example: plants. We have current assets, and we have our debtors, total. Then don't forget your accumulated fund. Accumulated fund from the state of affairs will be recorded. Then now what we call creditors at the end of the day. So at the end of the day, what you have on the liability side must be equal to what you have on the credit side to know whether what you have done so far are correct. But if we have differences, if they are not equal to each other, there is an error in our workings. So that's what we are talking about. So what we are saying is that a statement of affairs is prepared at the beginning of the year to get our accumulated fund, and at the end of the year we prepare our balance sheet. Let's solve example. Let's examine the question. We have the question here. The question is the following receipts and payments account of Julius Berger Football Club for the year ended 31 December 1998. We have a receipt and payment here, and we have another additional information. Insurance accrued, social in arrears, social in advance, transport in arrears, equipment. Now what are we asked to do? Prepare income and expenditure account, prepare balance sheet as at 31 December 1998. So we want to prepare our statement of affairs. I said our statement of affairs is prepared at the beginning of the year for a purpose, to arrive as accumulated fund. So when you look at, we only needed the what? The additional information to prepare our statement of affairs. So it's only we have to record income and expenditure. So let's look at the additional information given to us. Insurance accrued. It's a liability. So let's start posting current liabilities. We have our current assets. We have our fixed assets here. And the first item here is insurance accrued. Insurance accrued is a liability. Where are we to record it? We record it under the current liability. Insurance accrued. And the figure was given as 150. The next one is succession in arrears. Succession in arrears. So we have insurance accrued, we have succession in arrears. Succession in arrears is not a liability, it's an asset, because we are talking about income here. But when we are talking about expenses, it is a liability. Income in arrears is an income. So succession in arrears will now be on this side. Succession in arrears, and we are giving 600 naira. Then we have substitution in advance. The same thing that applicable to substitution in arrears is also applicable to substitution in advance, because we are talking about income. Substitution is an income. Substitution in advance, when you receive income in advance, is a liability because you have not yet provided services. So now substitution in advance, and the figure is giving us 170. So we have our transport in arrears. Transport in arrears, that's talking about expenses. It will be on this side. Transport in arrears. And what value is given for the 3? And we have what called what? Equipment. Equipment is a fixed asset. We have our equipment on this side. And what is the value of our equipment? We have it as 7,360. So don't forget, in our receipt and payment, we still have what we call an opening balance. This opening balance is also cash at hand or cash at hand at the beginning of the year. So it's also an item to be recorded in your statement of affairs because it's representing the opening value. So we now have cash at bank or cash at hand. Let me just put cash. 2760. Let's do the addition. What are we looking for? What's one of preparing this account? To arrive at our what? Accumulated fund. Let me write it here. We are looking for what? Accumulated fund. When you add the figures together, you will have 10,720. Am I correct? 10,720. 10,720. The difference between this, if you add this together and subtract from this, what we are looking for is our accumulated fund, which now gives us 10,357. 10,357. So that's our accumulated fund. We can then go to our income and expenditure for the year. Income and expenditure account for the year ended 31st December 1998. I told you that this account is prepared to arrive at either surplus or deficit. So this side is to record your expenditure and this side is to record your income. And let's look at the question. These are the income from the activities, and these are the expenses from the activities. So we will record expenses here. Expenditure. We record income on this side. So what are our expenditure? We have printing. Printing. Do you have an additional information for printing? No additional information for printing. The value of printing is 1720. Another one is insurance. We have insurance. Our insurance has additional information. Let's prepare our ledger for insurance because of our time. Insurance account. When I talk about insurance account, we have insurance accrued. It's an owing. So insurance accrued is an. So we are recorded our printing. We are moving to insurance. And I say insurance has adjustment. because insurance approved. So we now prepare insurance account. So insurance approved, when I talk about insurance approved, it is owing. Then the opening balance will be a liability. So you put your balance BD on this side, balance CD on this side. What's our opening balance? 150. You call 150 on this side, you call 130 on this side. So you now go to your receipt agreement. How much was paid for insurance? 350. It was on which side? On the credit side. You now put on the debit side. Receipt and payment. 350. Let's add it together. This will give us 084 480. 480 minus 150 is what you record your income and expenditure account. And that will give us what? 330. So we have 330 here. Then the next one is transport. Transport has also an adjustment. The same application to that insurance. We apply a transport account. My time is going. Transport account. The opening balance will be on this side, balance BD and balance CD. So we have 43 here. We have 43 on that side. We have 56 on this side. Let's go to our this account. What is the amount paid? Amount paid for receipt for transport 360. For receipt payment, we have 360. Let's add these two together. If you have the two together, you have 6, 1, 4, 416. 416. 416 minus this. 416 minus this, we have 373. So our income and expenditure. So that's what we got here. 373. Then we have equipment. Then we have wages and salaries. To be what? 2075. Because of our time, I will only finish our income and expenditure and move to balance sheet, maybe in a subsequent class. So let's finish this and then round up because of my time. So we have 2075. Then let's go to our donation, our income side. We have donation. Donation is given as 5,000. Then we have our subscription. Use the same method by preparing your subscription account. And what you will arrive at in your subscription is 6840. Because of our time. 6840. Then at the end of the day, we have depreciation on equipment. Our depreciation on equipment is given as 1,440. At the end of the day, if you add this together, you have 11,840. 11,840. And if you deduct from this, you will have our surplus. Our surplus is 5,902. So that is, we are through with our state of affairs, we are through with our income and expenditure. In our subsequent class, we will look at balance sheet to complete this question. Good luck and God bless you.